Welcome, everyone. Every other month, we have themed events. And this month's theme is opportunity in data-driven tech. And I'd like to welcome a friend and colleague, Jeff Hansen, who will be hosting you for the next hour to talk about opportunity data-driven tech and why data is driving the hottest areas of investing now. So I'm going to hand it over to you, Jeff.
Thank you very much. So let me just move on and tell you what we're going to talk about today. So our agenda today is we're going to talk about data tech and why it's the most exciting part of innovation. Just so everyone knows who I am and who don't know who I am. I've had an entrepreneur that's had many successful exits. I've been a VC. I've been an industry analyst writing reports on different market sectors. I've been a growth coach for over 500 companies over the last 20 years. And I'm currently an investment banker and I'm an active angel investor. So how do we decide that this was the theme for this event? And generally, the way it works is about 4 or 5 months before the event, Dalzell comes to me and says, you know, people are asking about this and that, and we'd like to have an event. And she threw out some things. Do you think it should be AI? Do you think it should be Internet of Things? Do you think it should be, you know, security? And my answer was yes. And the reason for that is I'm constantly doing research on what are the deals that are going on, what are the areas that are hot, right? And recently I had an epiphany when she came to me and said, well, I'm looking at all the deals that are happening in the third quarter of 2022. And everyone's complaining, well, deals aren't getting done or things aren't going on. But then I noticed 5 sectors that were having actually increases in investment, increases in exits. And I'll explain that on the next slide when I talk to you about the areas. But basically, they all have this commonality of data and ecosystems around data. And I also, in my day-to-day work as a VC, or sorry, an investment banker, I constantly am looking at what the deals we're doing, what are the trends driving those deals. And once I had this epiphany, I looked at the deals I've done in 2021 and 2022, and 60% of them had this pattern of data that was driving them, and it was driving this not only interest, but higher valuations. And you see this little bubble with the oil thing. The new terminology is that data is the new oil. And what that means is anything to do with, like, oil empowered so many industries, you know, through the 60s and 70s, et cetera. It's because it was a raw resource that enabled so many different industries to do certain things, whether it was making plastics, powering engines for transportation, et cetera. There is a very valuable raw resource that was being tapped. And you can see this nice little chart here. It shows that is from IDC, which shows the growth of data storage. And you can see the number, you can't really see the number. It says 172 zettabytes. You may not know what a zettabyte is, but it's unimaginably large. And you can see that that curve is not a linear curve, it's an exponential curve. And as, so all the deals I see with VCs, I say, are you still investing despite the recession? And they'll always answer me and say, of course we are, we have to, we have all this money on hand. I said, but we're being selective where we put it. I said, where are you putting it? They say, where the demand is. And demand is coming from here, and I'll show you why. So when I give you that definition of data tech, what am I talking about? I'm talking about these sectors. Data analytics, customer data platforms, data security, data governance, Internet of Things. And all of those actually work collaboratively, actually, because they're all happening in parallel, and what happens in one is driving interest in the other. Very important example is Internet of Things is you have sensors that are gathering data. That data, to be valuable to the organization, you have to do analytics, you have to do security. And if you're collecting the right kind of data and normalizing it in the right way, you can do AI and machine learning and start to automate things in your business. So that's how these things all come together. And used to be, we talked about software as a service over the last 10 or 15 years of being a driver of so many companies. And you're seeing a lot of companies that are doing what we call data as a service. So they may still have software as a service applications, but they're finding ways to monetize the data that's coming through their systems. So why now? And I always tell companies, you know, when you're coming to pitch investors, tell them why now. There's urgency about investing in your opportunity now. And I find most of the pitch decks I see really miss that point. You know, why is now the exciting time? Meaning, why is it fun for you as an entrepreneur? Why is it fun for the market and your customers? And why is it going to be fun for the investor to invest now? And here are the patterns I see in data. So first of all, we're reaching critical mass, that there's enough data, enough applications, enough devices, all interoperating, that opens up opportunities. We're talking about extremely high growth rates with anything to do with data. So if data is growing exponentially, all the things that leverage that data will also grow exponentially. We're seeing a maturing, emerging tech, and that we now understand how to better process data, to do AI automatically, to do a bunch of different things that were really in the labs like 3 to 4 years ago. It's becoming mature very, very quickly. There's these new business models, so it's SaaS plus usage plus a whole bunch of new business models, which I'll explain later. And then there's these technologies have a huge impact on the customers that are using it in terms of transforming how they do business, how cost effectively they can make decisions, and, you know, be smarter in how they do different things. I won't go through all these numbers, but essentially you can see there's some very, very big numbers. And with every big number for all those various sectors that I'm talking about, you'll see that the compound annual growth rate is, you know, just so you know, the IT sector is going to have a down year. It's going to do between 4 and 5% compound annual growth this year. Most of these technologies are going to do between 30 and 40% growth rate. So that's always the easiest for a technology company to deliver to a market that's growing at that pace. That means there's high demand and it's a must-have technology. You can see we're talking about billion-dollar markets, and even if you carve out very unique vertical niches or specialty niches within that, there's still could be a huge billion-dollar market opportunity for a small company. And you can see that at enterprise adoption, 97% of enterprises are focused, even though they may be eliminating a lot of IT projects in the recession, they're prioritizing all the data-oriented ones, because data is becoming the lifeblood of those businesses. So let's talk about what's going on in terms of deals. And I could have put up 30 charts of all these sectors and all the deals I'm seeing, but I just siphoned it down to these 4 so I can keep it simple. And then we can move on to the expert panel I have later, because they're probably infinitely more smart than I am about what's really going on. But you can see that AI and machine learning deals have been going up. And in fact, I didn't have the data all compiled. I was rushing today to compile the 2022 data, but it's actually even higher than 2021. And the exits are really interesting to look at, in that any of these companies driven by AI and machine learning tend to have fairly early exits. So that means they, instead of taking 7 years to reach that exit, they're reaching in 3 or 4, and some of them are being bought in post MVP. And you can see on the bottom left there that these are the valuations for those early stage companies. And as they get into Series B VC, you can see that the valuations are going up very highly. And related, and then I see similar trends in IoT and security, all that. But the one I wanted to highlight to you is when I looked at all the different SaaS sectors for basic applications, they all showed a curve where they went up during the COVID and then they started to plunge down. I want you to look at this business intelligence and analytics M&A deals. went up, it started to come down, and now it's driving high into the last quarter of 2022 and into 2023. So I'm not showing the value of those deals. I'm just showing the number of deals to show you the level of activity that's going on. Because people are all prioritizing their acquisitions and their investments for where there's high growth, especially when we're going into a recession. So the thing that's important to understand as an investor looking at these opportunities, many of them will just have your standard SaaS subscription. Someone will have more quite different app where it's entirely usage-based, or it may be a blend of usage and license. And then some of them will provide a managed service where they'll have some people doing stuff, providing professional services alongside maintaining something that's continually getting smarter and smarter and smarter with your data. And the last category, which is pretty unique to AI and machine learning, is there's emerging business models that are based on the capacity, our power of the servers in terms of the computational power being applied to give you better decisions or better automation. And that's an emerging area of determining the pricing for those products. So to give you an idea what's been going on in terms of AI and machine learning, because that's probably the most exciting part of all this, that all of this stuff cascades into AI and machine learning. Everyone talking about ChatGPT. This chart in the upper left shows how long it took various companies to reach 1 million users. ChatGPT took 5 days. Okay. So ChatGPT is, and a lot of these new technologies that we're talking about are what we call generative AI. So you can see all of the investments that are going on. And obviously there's always going to be a bunch of VC money going in, but I'm an angel. How can I play? Well, you should look at this. Not raised outside equity is 33% of the companies in that space. I don't know who's calling me right now. So you can look at all the different categories of generative media on the upper right, and you can see the amount of generative AI VC investment going on. And then the other area that I'm very passionate about is sort of what's going on with IoT, and that's creating this sort of fourth industrial revolution, which on the bottom left here shows that once you automate everything with technology and you have this digital data, you can do intelligence, and then you can also start to apply AI to make all that stuff happen faster, smarter, better, et cetera. And that's where there's a lot of interest for these technologies. Now, I mentioned earlier that there was a bunch of exits. The thing that's interesting about these AI technologies is you can't imagine some of them getting to being a billion-dollar company by itself. So that is why there's so much exit activity where they're being acquired as opposed to building it to a mega company. Because with data, there's all these ecosystems of different technologies around a certain problem. And eventually there's going to be large companies that are going to own that problem and then try to aggregate these technologies and to better serve that. So when you ask a seed entrepreneur that's using any of these what their exit is, hopefully they understand that. But as I mentioned, I have much smarter people than me to explain what's going on. So we have an expert panel today with 2 entrepreneurs I highly respect. We have Darshan Kaler, who's founder and CEO of Tradable Bits. And we have Troy Angrignon, who's founder of a company called Productive AI based in Silicon Valley. I think you saw their bios on the posting for this event. Let me start by saying that what makes them unique and why I've chosen them for this panel is they're not only at the leading edge of these technologies, but they're both very, very unique personalities, where Darshan's an engineer that really understands the impact of the technologies he's applying. And Troy is the mirror image of that. He's a sales guy that dives deep into technology to understand the change it's driving in order to drive how he can be better at selling that technology. So that makes them very, very unique individuals, a unique perspective. And can we make it easier to see their faces from
Do I have to speak?
So the first question is for Darshan, and I want Darshan to explain the history of his company and why it was so exciting when he saw how data was being used that made him jump into the arena with his current company.
Sure. Can you hear me?
Yep.
Yeah. Thanks, Jeff. First of all, Tradable Bit's been around for just a little over 12 years. Self-funded, never raised any money, so it's a bit of a kind of a weird scenario when I'm in front of a panel of people that might want to invest. The main thing that we've done, my background is engineering, as Jeff indicated. In 2010, I was director of Olympic Services, and at that time, there was something very compelling that was happening with media and content. Everybody became a broadcaster. So this really was an interesting time where you'd almost have to look back, where people just probably were converting from flip phones to a digital phone that we have, we've gotten used to today. And a lot of the broadcasters were very concerned about content and how to control it and so forth. And fast forward 2 years later, we started a company called Tradable Bits, and its main purpose was to really understand social media and how the digital world was actually transposing the way we are and what we do. And in 2013, a platform that we rolled out, we had 24.5 million monthly active users on the platform. And we were able to understand how social media was kind of connecting with each other. And the most interesting part that came out of that was the way you are on, let's say, Facebook or Instagram and Twitter, LinkedIn, and what you buy on Amazon and how you buy a ticket, for a concert or sports. These are all your digital presence, but that doesn't make you, all of a sudden just makes you what you buy. So from 2013 and on, we focused on a group industry that's specifically tied to sports, music, and entertainment, and formed what we call fan-based marketing. And the intended purpose of the technology was to understand how a fan and their interactions tied to the brand that they're interested in, and all the digital footprints that they might follow through from social interactions, purchasing behavior, and can you make something out of that? Now, fast forward to today, we have over 41 million unique profiles on the platform, specifically tied to sports, music, and entertainment, used by the likes of Live Nation, Ticketmaster, Whitecaps, Canucks, Trailblazers, you name it, to understand the fans, to market smarter. And that's really, as Jeff indicated, the oil is really this crude of data that's sitting in there, and then maximizing that and creating fuel out of it. So that's in a nutshell what Tradable Bits does. Jeff, you're talking, but I can't hear you.
Yeah, that marketing smarter concept. I mean, so simple, but it's, taking all these technologies and then siphon it down to that simple concept. Can you explain how you got that epiphany based on all the data you were looking at and how you were using it?
Sure. So we rolled out a product earlier on called Tradable. Now, in a short period of time, we had about, this was in around 2012. And the intention was to create a search engine for you personally and all the things you want to connect. And what we realized that within a week of running it, first degree, second degree connections, because we had about 2,000 people that connected, we were able to connect and graph almost 80 million people and all the attributions on it. And so what makes it really interesting is that, we have a web of connectivity. In today's world, there's a ton of privacy put in place to kind of restrict a lot of those connections. So you can't easily just graph that. But businesses have a ton of data. They just haven't realized the way to connect that data and what's important associated with the attribution on each of those particular data points. So for us, in the last 10 years was really just focused on improving and refining and finding that signal against the noise, because we have so much data now that it's glutton for punishment for a lot of businesses today. They don't really know what to do with it. They build data warehouses, they build all kinds of different things to collect, and all they've done is buried the signal. And so companies today tied to whether it be machine learning or data analysis or any of those BI tools that are being put in place is to really surface and the most essential data points and insights. And today's world is probably more associated with insights, where several years ago it was all about a build and collect.
Yeah, and so we can also make all the investors online envious here. You did this all without outside money, right?
Never raised any money. So we're in a unique scenario because I am an engineer, and my other co-founder that we brought in is a database architect. So we kind of built it from the ground up, started to generate some income, and found how to make money. Today we have almost 50 people globally. We have a subsidiary in Australia. We sell services, the product in North America, and it's starting to expand into Europe.
Let's move to Troy. Troy is some of you may recognize Troy because he used to live in Vancouver and work for Business Objects. He decided to go down the valley and work for a bunch of cool tech companies down there. He could have chosen to work at any company because he's an accomplished salesperson and he would have been in demand. But you decide to throw all your eggs in this AI bucket, and you're mentoring and coaching and advising a number of startups in the AI area. Why did you jump to that area?
Thanks, Jeff. Yeah, it's nice to be back and see some familiar names. It took some exploration. I had been at Cisco at the time, as you and the team know, and we were working on, at the time, I kind of came in on cloud, and we were working on selling kind of software-defined networking and infrastructure and things like that. But then we sort of got this product dropped on us, which was this machine learning based cybersecurity thing. And I literally remember the day where they said, we're going to give you this tool, it's machine learning. And I said, what's machine learning? What does that even mean? And it was this kind of moment of like, well, what does this thing do? Well, it ingests 2 trillion network flows and does all this analysis on it and looks for anomalies and maps out all 20,000 of the applications in the enterprise in like 4 hours. And I just it blew my mind. And it was one of those moments where, sort of like 16 years ago when I saw AWS S3 and then, the compute launch and saw what it could do and how cheaply it could do it. It was one of those kind of similar moments for me. So when I got out of Cisco, by that point, I was kind of hook, line, and sinker on AI. So I looked at a few other sectors, but ultimately I wanted another big wave to ride, because I had been on the kind of cloud computing wave for basically 16 years. And I thought, well, this is definitely a big enough wave that I can jump in there and learn a lot, do a lot, and have a ton of fun doing something big.
Thanks, Troy. So to give everyone a sense of being at the leading edge of these areas, tell me about something that's happened to you in the latest little while in terms of what's it like to be in the middle of the tornado of this exponential growth of data and AI. So I'll start with Darshan.
So, we're in a unique position. There is a massive constricting of how data can be used, utilized, and collected. And even though it's accessible, and then there's so many of them that you can kind of pick, businesses are now impacted by, the way they marketed in the last 10 years. So you almost have to kind of get some foundational truth on what this means. So in the last 10 years, there's a ton of marketing that basically focused on social network, search, kind of third-party network to try to sell your product. It was quite fruitful. Everybody made money, including the networks, the likes of Facebook, Google, you name it. However, with the restrictions and controls being put in those, first-party data is king. So what that really means is that you're really not allowed to reach or connect with somebody unless you know them. You know, and I can see that moving forward more and more. And really, governments are putting, restrictions and tools in place to protect the individual and the data and how that data is being utilized. So you have to get really, really smart about how you manage the data that you are collecting and maximize on that. So the needs for machine learning in understanding your business is key, because you can't just, blanket statement, I'm going to send an email to 1 million people. Those days are done. It's considered spam today. It's all about personalization. And to do that at scale for large businesses, it's a magnitude of complexity. And you will need tools to make that happen. The future is really direct to consumer connections in a lot of businesses in the last 2 to 3 years. And the reason why they're spending money on data is they want to bring it home. So, in the days of, you almost have to look back 7, 8 years ago, everybody's going, well, how many followers do you have? How many fans do you have? Like how many, like your Facebook page or whatever that may be, like 10 years ago. No one's talking about that. Everybody's talking about how are they building their own infrastructure to own their own network, to own their own fan base, and to market directly to them. Because at the end of the day, if Facebook goes down, or Meta, or Google, or any of the other networks that you're trying to reach your audience, you don't care, because you have a direct to consumer market strategy. So certainly email, even though you would think it's been here for decades, it's still the way to go and market. Mobile and SMS in North America is big. For international, maybe WhatsApp and some other regions of network connectivity. But at the end of the day, it's that simplified way of connecting with individuals at scale and providing some personal connections and personal interactions. And that's hard to do when you're dealing with, potentially, 500,000, 1 million fan base and so on, and trying to make sure that you're sending the right information at the right time, at the right moment, so people are not getting inundated with a lot of crap that you might have been in the past.
Okay, thanks, Darshan. So to you, Troy, the same question, but I guess it's different for you because you get to experience many companies going from MVP to scale up. What is that tornado like?
Yeah, well, it's funny because, of course, they're all starting their go-to-market journey, right? A lot of them have built something. They're technology founders. They commit the sort of the original sin of we'll build it, then they will come, which we all know really well. And as they start that go-to-market journey, they're all starting to understand, work on what is our strategy, what's our marketing plan, what's our sales plan, how are we going to do inbound, how are we going to do outbound. And just to key off what Darshan said, it was interesting because, even just to pick outbound just for a second, one of the interesting tests, and I just ran this last week, was to take a whole pile of contact data, right? The B2B data that's out there, that were not first party things. These are just out of a third party database, pull a bunch of data in, enrich it from 30 different or 40 different providers that are all coming through this exchange, and then literally have it pull down all of the LinkedIn posts written by those people and have ChatGPT summarize what are the top 3 careabouts for this person based on the content they wrote on LinkedIn, so that then you can do a mass personalized email or LinkedIn connection request to the person saying, I've been following you, and based on your content, it seems that you care about A, B, and C. We should connect. Things like that. So it's really interesting to see the kind of really crazy rapid innovation that's happening in this space, so that you're pulling in data, you're cleansing it, you're merging it, rationalizing it from a bunch of providers, having ChatGPT read all that data, summarize the data, so you can then do an outreach that's personalized. So crazy things like that are happening.
That's both cool and really creepy. Troy.
Yeah, exactly. It's both. 100%. I think, but bigger pattern, right? I think it's typical of what we saw in cloud, right? Because it was a big enough wave. You get the predictable chaos, the usual noise, a lot of semantic arguments, a lot of people, the taxonomies are not yet defined. The markets and the sub-markets are not yet defined. So you get all that sort of chaos and positioning for, I own this term, no, we own this term, and it means something else. And you get a lot of, technology push. So a lot of founders just all get funded and they all just dump stuff on the market versus customer pull, saying, I need this to solve a business problem. So a lot of the sort of the same patterns we see with every big wave.
Okay. My last questioning before we open into the floor is monetization. So how do people make money with this cool technology? We'll start with how Darshan makes money, and then we'll go to Troy to talk about all the companies he's helped, how they figure out how to monetize.
Sure.
So Darshan first.
Sure. So thinking, you bring back SaaS as a good model. It is a good foundation to address recurring revenue. And what I found, through the time, we've been around for many years, we realized that once they come onto your platform, there's other, opportunities of enriching, automating, let's call it consumption-based data that could be monetized. So even from the direct business itself that's using your platform. So for us, the way we make money is three ways. So we make in combination what we consider SaaS is really the subscription, which is the contract. So the contract gives us an opportunity to address an annual to multi-year contract. The second thing that can get added on to that is what we call usage. And usage is really how the data or the system is tapped. And you can buy bulk consumption usage. Think of it as, I want to be able to send out, 100,000 emails per month. And then so you sign a multi-year and they buy a bulk associated with that. But they can't start without a subscription. So that just gets added on. It's still part of the SaaS. And then, other forms of usage could be enriching the data that you can kind of sell back to your community. Obviously, it has to be anonymized and everything else, but this is your insight. So from our perspective, our platform is specifically focused for music, sports, and entertainment. So it's very, very enriched set of data points. When we anonymize that set, we start to identify predictive models, how someone might behave in particular regions. How people might buy in Toronto is a little bit different than Vancouver. And then similarly, depending on the industry, it might be, again, a little bit different again. And then that gives you some improvements, and then you can potentially sell that back as part of improvements on the data automation piece, which is really, really different in the old days when you just take a look at a SaaS. Oh, I have a subscription, I get X amount of dollars, and then that's it. Where today it's really a layered on approach that increases the overall SaaS. So all of a sudden now, instead of just making a license agreement that someone may use your platform, you're actually having a longevity growth. So most of our clients stay on year over year because the data enrichment and the opportunity of doing that just gets better and better year over year. So to remove that is very complicated. Just to automatically I just have now 1 million emails. Well, no, with Tradable Bits, you actually had 1 million emails understanding who's most likely to buy more expensive products in certain regions, what they're interested in, their affinity. You can't take that with you. And so then it becomes a really sticky point. And then last but not least, I think Jeff identified this, is that not everybody might be skilled enough to leverage the technology. And so, here we got this massive, let's call it a tractor. And someone goes, well, I'm not licensed to understand how to drive a tractor. So we're like, okay, sure, no problem. We can help you drive that for certain pieces. And so that becomes more professional services. And then especially when enterprise, there might be some interesting data points that's unique to them that they want to incorporate as part of the strategy, and that's it. So, but in reality, about 80% of your business in today's world, when you're dealing with data, should be quantifiable as a SaaS. And if you're not doing that, there's there's ways to do that, and you have to change the model so you're not splitting those opportunities. And then probably 20% was always going to be professional service, especially when you're dealing with big data.
Thanks, Darshan. So Troy, is that similar to what you're seeing? Are you seeing a lot of different variations, or maybe there's something really cool you've seen that's really different?
I think the big buckets are 100% consistent with what Darshan's saying, right? You've got basic software, SaaS, right? We all know that pattern. You've got the services, professional services, I'd call it the one-time professional services that go along with that. You've got the managed services you've talked about. And I think you've got the usage of a platform. And I think the usage models are getting really, that's probably where the innovation and the weirdness is coming from. I think, Jeff, you and I talked about this, but I've seen everything from, a company saying, well, we have, per seat or per team pricing because, hey, you can't use this without a team. So we'll just charge you a flat rate for the team. We don't even care how many people are on the team. So that's been an interesting kind of variation on the SaaS model that I saw emerge. I've also seen in the data space, it gets really, really weird because I looked at a lot. I looked at about 100 companies that do labeling, transcription, content moderation, all the way up to synthetic data. And their pricing was all over the map in terms of structure. Some of it was come to us and buy a prepackaged data set. Other ones were, hey, give us 1 billion frames of your video. You're an autonomous vehicle manufacturer. Give us 1 billion or 1 trillion video frames. We will label it at a per frame cost. And so that's, I guess, kind of usage, but it's more piecework. And then there were other ones that would flip it around and go, we'll charge you per hour and we'll get more efficient over time as we label them because we get to know the domain more. So we're incentivized to do higher quality work because then your unit cost drops over time for labeling. And then other companies would come in and say, forget it, that's the old way of doing it. We'll have machines, do calculations. We'll have rule systems and machine learning label all of those trillions of images for you, and we'll only have humans in the loop to sort of like audit it. And so they would have a completely different model. They would probably just charge like on a traditional SaaS. So I've seen things like AWS. I think we were all pretty confused when AWS started charging on compute units and storage units, and people were like, what is this? I'm seeing similar things like, oh, we'll charge you for 1 million decisions per month made by our prediction or decision engine, or we'll charge you for 100,000 contracts reviewed by our OCR system. So I'm seeing a lot of innovation in this space, but I think if you bucket them, they're probably usage, managed services, professional services, and SaaS.
Let's go to questions from the floor. Do we have anyone in the room here that wants to ask a question of the panel? So you'll love this question, Troy. It's understanding about the network effects of ChatGPT. What's going on there?
Well, I mean, you already nailed it, right? It's humans for the first time in history at scale have been able to talk to an AI. So everybody just told their friends. I think it was pretty simple, right? Within 5 days, you had 1 million users, and within whatever, it wasn't long after, it was 10 million. So I think it was just, I don't know that that's a pure network effect. I think that's not according to the definitions. That's just probably virality more than pure network effect. I'm not sure if I answered the question though.
Okay, I'm from the front row. I don't know if you guys heard that question, but it was asking about the trends towards regulation that are creating either opportunities or challenges in different geographies. I'll let you guys think about that.
That's probably Darshan's.
I'll start by my initial answer is that data residency, data governance, regulatory compliance, they're all huge buckets of things that have to go in conjunction with all of this stuff. So you'll hear that some of the companies presenting today even talk to helping to address some of those, and as well security, because if you don't secure the data, you're at risk for all those other regulations that if that data gets escapes. So Darshan, why don't you give your perspective on what you're dealing with all those geographies? Darshan? Okay. Oh, Darshan, can you hear me? Can you talk a little bit about the regulations that are impacting adoption of your technology in different geographies?
I think we lost his audio.
You hear me now?
Yes.
Okay. Meanwhile, is there any other questions online? Any questions in the room?
Right. So one of the things that has really been highlighted with ChatGPT is that it can write really clever answers to questions, but they're often incorrect, which sort of brings to mind the data that is feeding AI and ML programs and generative programs like this. We need certain strategy for ensuring the quality of what is being put in, because if you're putting noise into the system, you're going to get noise back. So what are your strategies for ensuring data quality when you're setting up any of these AI or ML systems?
I mean, I can answer that a little bit on our side. So first of all, when you take a look at, everybody's obviously very excited about ChatGPT and everything else, but at the end of the day, you're absolutely right. You don't know what the basis of how that was trained, right? But the main thing here is that the concept of machine learning has been around since 1970s, I think. But in reality, how it's evolved in the processing engine creates unique opportunities. So for us, we don't go and use ChatGPT or anything like that, or any AI or machine learning tech. We built our own, right? Because a lot of it, you have to be smart about how you feed your own system and make some projections on that. So the question is that, if anybody's doing machine learning, they're not taking a public source of context. They're building their own. They might use the mechanics of the engine, but at the end of the day, the baseline of how it starts, it comes from a whole bunch of data points that they believe produces the best outcome for that particular need or that business. And today, I think what makes it very interesting in regards to machine learning is you could do that at scale. So 10 years ago, you had to literally build a lot of boxes and things to make stuff work. Today, you can spin off an entity, whether you want to use Google, AWS, Microsoft now in combination with certain things, or you can use open source as a starting point. I think the most interesting question you asked there was that how do you then feed and decide what information is important and how the outcome is, and that's important. And I think that's just the starting point of everything that we're learning today, and even including our own self biases. So I'll give you an example. This is pretty simple. Talking to one client, they've decided that, hey, if someone buys something for $750, they're more important than somebody who buys something for $50. And I'm like, well, okay, but is that true? And so when you start looking at machine learning, you start to define, what, from our perspective, value of the fan and the interactions. There's a weighting structure you can start changing along the way. And if you make a decision on your own bias at the very beginning, prior to actually determining what is true, then you've kind of self-determined the outcome. And so when we're dealing with big data, then the first intention is asking the right questions about what's important and what data points that you feed into it. So it's absolutely clear. And then deciding the outcome with different scenarios, and then testing it out in the marketplace, and then seeing how that actually responds to the right thing that you think you made the assumption on. So it's a bit different in the scenario where in the old ways, you kind of decide what you think is true, you produce it, and you're like, it's done. In today's world, you start to decide what is important as a starting point, and then you want some insights. Really, the outcome that comes out of that is the intelligence. As humans, you can kind of make better decisions than AI for sure. And then deciding to teach the machine what is correct, what is not correct, according to the outcome that you want. And so there's a lot of iterative process to do that. And then once you figure out certain components, then you kind of let it expand. So I don't know if it answered the entire question, but it's true, yes, you need to feed it the right information. You have to decide what is right information. And then, everybody's building their own machine components today, which is not just a general purpose source.
Is there any other questions or at the back there?
Hi, Tony. Hi, Darshan. Fabulous conversation. This is Ajay from Descender Capital. When we look at investing in companies, we're looking at companies with some moats around their data. Our belief today is that the transformers and the models would kind of collide together, right? You're going to have a 96% efficiency coming from one and a 96.8 coming from the other. But what would truly differentiate is the data set that you have access to, specifically your proprietary data set. I'd love to hear a little bit from Darshan in terms of what you're doing in terms of generating. I think you have the leverage where you can generate a data set with the transactional data that you probably have privy to. And love to hear from Tony about what you're seeing in terms of the market, like how are you able to sell into the market, your ability to have this private data available to you.
Okay.
So for us thank you for the question. So the data source and automation, the most interesting part at scale now, and we focused on a very niche market, right? So data, I mean, you can apply it to a billion different things, but we focused on, we're not curing cancer here. Like literally for us, we are interested in entertainment and exciting things, artists, concerts, sports and so on. But there's some really interesting metrics when you start building that in, because whether someone is going to see a concert, going to a music festival, or going to watch, a hockey game or a basketball game, it's that moment in time that's alive. And there's some compelling things about human beings, about how we behave and how, our consumption of content is really a marketable opportunity. So the fact that we stuck with the niche market, it does provide some really high throughput intelligence that makes it a lot more interesting for a marketing strategy to build a new product specifically, to market to a certain segment of people. And then there's some cross-pollination, because at this point we're not overlapping, industries. We're overlapping a fan base that typically is interested in entertainment. That gives the businesses that are on Tradable Bits some flexibilities of insights that they couldn't foresee just by doing it on themselves. So, case in point. So, for example, if you just had 1 million email and phone numbers, and you can see, and you're based in Vancouver, can you expand on building out and trying to get people in Alberta to come see your product or whatever that may be? Out of that 1 million, you wouldn't know who's willing to travel or who's willing to spend more money to do that, because you only have one segment of interest on buying behavior. For us, we start to identify the connections that could happen where someone is willing to travel to see an entertainment, and maybe even determine, without even asking that individual whether they have expendable cash, the fact that their buying behavior shows they have expendable cash treats them in a particular category of interest for a given business. So in the end, when we take a look at multiple data points, we still first have to decide within the business what's important. And the fact that we're sticking with a niche industry, it gives us that opportunity to ask similar questions along the way. So from that perspective, the data that comes in, we start to identify affinity and modeling that answer some questions from a business perspective about understanding their fan base. So that's in a nutshell what, when you take a look at when you de-anonymize set of data points and then allowing you to enrich your own data collection and interactions, then those are the things that could potentially provide some outcome. And then obviously those models you can test out and see what the success rate is. And so if we surface and say these 1,000 people are willing to travel,
So,
and then you do that and you see an 80% success, then you know that modeling works.
thanks, Darshan. Now I have to put Troy on the spot. What's the secret to selling AI in 2 minutes or less?
It depends. Who am I selling it to?
Well, you're essentially selling magic, right? So how do you sell magic?
Go back to the basics. What business problem are you trying to solve? Honestly, it's like every other piece of technology we've ever sold. You've been selling it. Everybody, a lot of the folks in this room have been selling it for decades. What's your business problem? Does this thing help you achieve it better, faster, cheaper than any other tool you have in the toolbox? Then let's use this tool. That's my less than 2-minute answer. Take away the magic and
Okay.
just get down to the
So,
nuts and bolts of what it does.
So to wrap up, before we thank you two, what's your 1 or 2 tips to investors at looking at companies in this space?
Darshan,
So
I'll throw you under the bus.
Yeah, thanks, man. I don't know if I'm the right guy to ask that question because I've never taken any money from anybody. But
Be like Darshan.
So I think the right answer is and it goes back to what Troy indicated. Does the solution solve a problem for the business? Period. So, in my explanation there, we're talking about, who's willing to travel, high throughput person with big money and all that. That's a problem. So, when someone's doing a music festival and they want to sell a premium ticket for $2,000, you can't sell that on Facebook or Twitter. And then someone, I'm going to go and spend $2,000, fly somewhere out of pocket, could be 5-7 grand by the time you're done. How do you find those people? Right? That's a good question. So a business is trying to figure out how to find those individuals. And so if machine learning or AI can help solve that and surface it, that premium buyer, or potential opportunity for that buyer to be surfaced, whether someone goes and calls them and does the outbound call for a season ticket holder or whatever that may be, it's huge money. And so that's what's going to excite the business. So if you're going to invest anywhere, I think you have to make sure that the business that you're investing in totally understands how can they make the company make more money, save money, or optimize the way they're doing it so they can make, improve their overall serviceability within their business.
Okay, Troy, you got the last word.
Okay. I think trust your gut and the decisions you've been making all the way along. Think of it as a black box. It's just a set of technologies. It's just a technical solution to a particular problem. So at the end of the day, start with the basics. Is this a business problem that needs to be solved? And is there a market for solving it? And what are the current solutions out there? And now can you find this team with this new black box that can both build that better mousetrap and market it and actually access that market? It's always the fundamentals. Don't get hung up on the AI. I was on a call yesterday and a founder came and said, I have a problem and I can solve it for this market and it's going to have AI in it. And by the end of the call, I had convinced him there was really no AI in there at all. So don't get hung up on the technology. Just focus on your due diligence that you've always been doing.
Okay. I'd like to thank the panel. I would like everyone to give them a hand and they can hopefully hear you.
Thanks, Jeff.
Okay, excellent. Thank you
Thanks.
so much, Darshan and Troy. And thank you so much, Jeff, for organizing this panel.